I think we always apologise that, we're asset finance with this industry over here. But actually, it's big, it's important, it makes a massive difference to people's lives, and we should just puff out our chests and just tell everyone about it.
So, welcome to another episode of In Good Company. Today I've got the pleasure of being with Christian Roelofs, CEO of Finativ, and John Phillipou, MD of Paragon SME Lending,
yeah.
That's it, and Chair of the FLA. And myself, Alex Bywater, COO and CFO at Woodhurst. So today's topic is shaping the future of UK asset finance. And on the way, Christian, we were talking a little bit about why does this conversation matter today? What makes it super relevant now to bring up? Do you want to share some of those insights?
Well, yeah. I mean, being the most important person in the room, John, it's all about John's diary, and I think it freed up recently based on a recent Supreme Court reversal. But we'll try not to cover too much of that in the future. But I think apart from John's diary being free, I think it's the perfect time now that cloud is lifting.
Very good. And you've both been in asset finance for a number of years. What got you into it?
More than me.
Yeah.
Yeah. I left Polytechnic back in the day. There's an age thing, and went into insurance for 6 months, and actually got a little bit bored. And after, there weren't many questions coming into it. Was home lines insurance, travel, motor, car insurance, and I got a recruitment agent phone me up and said, there's this job in asset finance. I went, what's that then? There's a lot of people, and ended up working for a branch of Northwest Securities in Portsmouth, and suddenly, quite quickly, I realised that I was dealing with multiple industries, and at no point since then have I ever been bored. So that's probably a good sign.
That's excellent. And how would you say the industry sort of changed over the years?
Well, it's evolved, and I think the assets we finance and the way we approach the market's changing. I think fundamentally, however, the products are broadly the same, and I think that's actually something that needs to evolve as well. So on one hand, it's changed, but there's a lot more to do.
Okay, and in today's market, then, what do you see as some of the growth areas in asset finance?
Yeah, well, I think everyone's talking about green and sustainable. So that's quite a market that is good for the planet, should be good for business as well if we embrace it. And there are other markets that are having a tough time, hospitality and retail. But there's everything in between as well, which we've always been entrenched in, that we still need to support. Cars, trucks, transport, construction. Mm-hmm. So I think we've got to remember that we're quite a big economy here, and there's an awful lot of things that need financing and assets, and whatever the government agenda is, we're a part of that.
And we've seen some most recently, sort of, I'd say over the last 12 months, probably 5 or 6 sort of major asset finance companies in the UK either close up shop or move the product elsewhere. Is I see that as a big opportunity, but obviously there are some headwinds driving that as well.
There are headwinds. I think there shouldn't be a race to the bottom. We should price accordingly, and there's risk and reward, and there's also building a long-term business plan as a lender. And I think some of those banks and lenders who've exited, they have cited return on capital as the challenge, and some have left because they never got scale, and some have left because their funding model changed. And I think if you stand back and look at all three of those variables, they are probably the key ones that you need to be aware of when you're setting your stall out in terms of how you address the market.
So I guess linked with that and exploring a little bit further, what would you say were some of the shifts that you've seen in the industry in more recent times for how businesses might use asset finance for, I guess, their day-to-day operations?
I think from customer perspective, we've got a change in demographic of customers. We've got a generation of business people now who grew up with the iPhone, grew up with the internet, and are probably impatient, and probably rightly deserve to be impatient because they've got a business to run and haven't got the luxury of time to go chasing around banks and waiting for phone calls back as it was. So I think there's, and that's driving competition and driving behaviours. So I think that's a positive, but on a lending side, as an industry, we've got to be reactive to that. And the customer is always right; they drive the market, and I think lenders who have grasped that and evolved with that will be in a good place, and those who yearn for the good old days may fall out of the market in time.
And I think it was interesting. I was at an industry, or chaired an industry event quite a while ago now, maybe 12 months, but it feels like sooner than that. But it came out quite clear that one of the issues was actually the fact that not enough SMEs in the UK can get to the asset finance that they need. And I think that's a big point here, is that it's not necessarily that the use of asset finance is changing. It's that not enough SMEs can get the access to the finance that they need. And there's a big industry push to be a bit louder and have a voice and have a bit more of a presence in the wider market, I think.
Yeah, and I think when we do the FLA surveys of the members, one of the things that always comes out high is the media presence of our industry, and it's a balancing act, because you can run into negative headwinds if you get that wrong. But I do think most SMEs, they open that first bank account typically with a high street bank. I think there's some good challengers now that have got business accounts. And then when they need their first loan or they buy their first piece of equipment, they naturally go back to that bank. But they may not be established enough to borrow from that bank. And they end up looking around the market. It's not always immediately easy to find. And this is where obviously the brokers, intermediaries have a big role to play, because they're local, they're in the market, they're working with those customer areas, and they can be a good window on our industry.
Yeah. Okay. Yeah. And one of the worlds that myself and Christian work in, all around transformation of businesses, and specifically we see a lot of digital transformation happening in the world that we work, which is a lot with building societies, but we're working more and more with specialist lenders, and you've been seeing it a lot as well with asset finance. Be interested to hear from yourself, John. What would you say were kind of the key drivers for transformation with asset finance?
Well, when the COVID crisis started, I saw that as an opportunity to upgrade some tech in the bank that I'm working for. And I did sort of do similar sort of podcasts saying anyone who's not taking the opportunity to look at this now is probably missing a trick, because markets are down and you've got some time on your hands and you can reflect on things. So we started at that point, but I do think as you're coming out now, there is a customer requirement for access to information and data and almost what used to be a chore, giving a statement to a customer in terms of what their balances were, what their interest calculations are, and what's coming down the line is what the emissions are. All this information needs to come from the systems, and if we're waiting there for it to automatically drop out the sky, it's not going to happen. So that and people have to start thinking about this, and also how your customers are going to interact with your organisation and brokers going forward. So it is key. The transformation is, and going back to that product at the beginning, the three core products: finance lease, operating lease, hire purchase. They're 50 years old, and there's more to it.
And I think something that I've seen in the market as well, and I hear from a lot of people, is the fact that sort of, I suppose that split of, I think there was a lot more op lease going back many years, and probably even more finance lease. There's the HP seems to be quite a large product in the market, and with the word I've used before is commoditization, right? So we've commoditized it because HP is, you've got less levers to pull and less sources of revenue, so it's harder to make money, but it's easier to transact, right? Yes. Is where we've sort of gone. And whilst that sort of takes your product differentiation off the table, so it's the old, you can do differentiation on price, on product, or on service. And I think price, we've had people exiting, ROE, ROC has been mentioned. So we really need to focus on that customer journey. And one of the things that I've heard people realise, or come to the realisation of, and they already knew it, but I think it's become an area of focus, is the fact that in the SME asset finance in the UK, the customer is actually the broker, right? And more emphasis needs to be put on the broker journey. The customer, once it hits the CMS and they're live, right, and managing from there. But that front piece, which we refer to as prop to payout, I mean, the broker is your customer there.
Yes.
And a focus on that is actually the new battleground within asset finance.
And if I was to flip the question and I was to say, what would you say were some of the key blockers or things that people aren't, why they're not transforming or going on a transformation journey? What are some of the things there? Why might they be hesitant to go on a transformation?
Do you want me to take that? Okay, well,
I'll add to your
Right.
intelligence.
There's cost, and we're doing okay in business now. Why change? And also the squeeze on margins is probably driving the behaviour. It's quite hard to invest when your margins are dropping. So you've got to prove out that model. But equally, it's a big market. I mean, there's 40 billion plus of asset finance lending outside of cars in this market. There's a huge market to go at. So actually, it's not that if you don't build it, the business won't come. It will be there if you get it right.
Yeah.
And that share is only 41% of UK investment. So you've still got 60% of non-equipment finance market to go after.
And it's actually fascinating because it's your Kevin Costner Field of Dreams. If you build it, they will come.
Yeah.
But I think I totally agree with you, John. I think what we've seen certainly in the market is the fact that there is an end game here. And the thing for me, because margins are thin and no one wants to really invest in just what they think. When you say transformation, I think a lot of people, usually you say operational transformation or digital transformation, and people tend to interpret that as operational efficiency. And I think the message that we're trying to get out there, and I think the message that needs to land, is the fact that this is going to drive growth. It's growth everyone's looking for, right? Because growth, economies of scale change that return picture. So you really want to focus on a transformation that will drive growth. And that's the part, that link is, I think that hopefully that is going to unlock a lot of the journey for people. The only other thing I would say is, I actually think that if you asked a lot of the companies, they think they either have transformed or are on that journey. And I think it's and we're actually doing a broker survey at the moment, which getting some views on the funder performance and where the funders are sort of rated against each other on sort of certain different aspects. And I think it will be fascinating for some of the lenders to see the results, because I think a bit of a reality check of where we are versus where we could be is hopefully going to be a driver of more of this.
And there'll be an interesting layer to that as well, because what the intermediary, the broker perception of that lender, and then you could overlay from the lender side what they're able to report back to regulators from their journey. And I think this is another element that we need to factor in, the fact that with the court case that has driven some industry questions in terms of whether we should forward manage our asset finance business for the future-proof it, and the old regulators, if it's not written down, it didn't happen.
Yep.
Those type of sentiments. The more the system and the data can capture those fields from the intermediary to the customer to the lender, the cleaner that will be for reporting. And I think this is another piece where technology is going to be a great help.
So Christian, we were talking about transformation earlier. So with transformation in organisations, where would you say the value is that people get out of a transformation in an organisation?
Well, I think it's interesting because at the moment I see people going through transformation in a number of different ways, and I see people sort of thinking that technology investment in itself is transformation, and there's quite a bit of one-off sort of tech investment to solve problems, or an investment in a change resource and an expectation that's going to drive their transformation. And whilst it is giving returns, of course, investing in people and investing in systems the right way will get you returns. We've actually seen really good examples recently of a couple of players invest in it from what I would call a really transformational perspective of taking an end-to-end process view and thinking about the target of why they're going about it. Instead of just solving a problem, right, internally or driving efficiency, it's actually leading all the way through to growth and driving growth and taking that holistic view and going through that sort of, you could argue big bang transformation, but it's never that really.
Yeah.
But going through that is actually, it's driving a genuine competitive advantage in today's market.
Excellent, John. Anything to add there?
No. I think I think any investment, it's that cultural transformation that goes with it, and picking away. And I think if you don't there's no point replicating the way you did things before just on a new system. You should use it to drive that inherent change in the business all the way through. And I do, coming back to some of Christian's points, that you've got to remember who the customer is and what you're trying. What it shouldn't be for the lender. This is all about outputs and the what's the benefit to the market and who's feeling the benefit. And I think too many organisations get hung up in the internal benefits and then realise that it won't make a difference to the market.
And on that, are there any, and this is a broad question, are there any digital data innovations that you've seen in the market, maybe redesigns of the customer experience, customer potentially being the broker, that have really had an impact?
Well, we've got a platform we're using on some green electric vehicles in London, and we've partnered up with a software provider there, and that's quite neat because it's a bit ahead of the curve in terms of giving data into not just the geolocation of these vehicles, but it's also you get a NOx grid of nitrous oxide emissions and CO2 emissions of wherever these vehicles are, and you can bring up a statement and say, this car has polluted this much in this area at this time.
It's really granular,
and you can and it literally down to 3 square meters on a grid across the city, or wherever, well, anywhere in the UK, but you can then put your fleet in and you can report your tranche of assets, and that's going into the customer database, which eventually they'll report in their stat accounts. But equally, from a lender perspective, we can start building a scope 3 picture for future emissions off the back of that. So that's a really neat thing.
Yeah.
And that can be plugged into most telemetry and into other machinery. So the fact that this stuff is there.
Yeah.
So that's quite a neat one that we're seeing.
And how did you come across something like that?
A colleague introduced me to a fintech. Funny enough, we're sitting up in the the fintech area of London at the moment doing this podcast, and actually I sat in a room similar to this and just had a chat with someone and thought, I like it.
Yeah.
And it's taken a few years to propagate, but you and sometimes you've just got to go with your instinct. It was a good idea, and they had the right brain power behind it to deliver it, and it started to come through. And there's been a bit of a partnership. We've helped them with documentation and transactions, and now we're envisaging that being a sort of a partner offering that we could go to customers and say, you can have your standard hire purchase or finance lease, or you can have the one for a bit more of a fee per month. But with that, you can have all that data, and it's quite funky. So we're just at the start,
and taking it from a sort of a complicated end and a niche end, but definitely valuable, to something that I've seen that was one of the simplest applications of a bit of automation as sort of but it revolutionised a particular brokerage that I had as a client at a time. Obviously, and this is interesting to see it from the broker side, not the lender side, but obviously as a broker, they had a number of lenders, and what they realised was they were submitting so many applications, right? And it got to the point where all the people keying the same data over and over and over again. So all they did was invest in a couple of bots and literally train the bots, match the fields, their CRM system to the lenders' portals. And the bots ran overnight while everyone was asleep, and everything got done. And it literally revolutionised the operations of that business. Something very simple.
Yes, yeah. That's cool. Also removes the human error sort of side as well of data entry, which can happen a lot. As we've seen, and then that messes up with all of the future really cool stuff and innovation. If you don't have the fundamentals and the basics right there, then it gets a little bit trickier when you get into the exciting AI stuff that everyone seems to be talking about in the market. You can't go to an event or conference without it, right?
Time check before AI was mentioned.
Yeah. So I guess continuing from that, you gave a good example there of data. Both of you did the granularity of data. Are there any kind of other data-driven innovations that you've seen? I have touched on AI, but is there anything else that you've been kind of talking about or exploring? The way that data warehouses have been around for years and years. Is there anything kind of cloud architecture or data lakes that you guys are looking at, seeing in the market?
We've gone for a single customer view across the bank, and that's been a big challenge of investment. But we've got multiple customers that may have a buy-to-let mortgage with the bank, they may have a savings account with the bank, they may have a development finance loan, and they may have an asset finance and cars and all those other things that go with the company. And we've been operating on different platforms in those separate businesses, and it's probably too big a step to slam a mortgage business together with an SME lending business and expect the system to operate. I've yet to see it. I think many have tried. But the broad view from the customer perspective is how much have I got in the relationship with this bank and what data can you give me? So actually pushing it into a data lake and then managing that really carefully and then extrapolating that data back into useful reporting is a key thing. And so I think this use of data lakes is important.
Yeah.
And I've seen that play out at a business where I was actually in an interim role recently, where they use the structure of, and it's all about the tech architecture, the data, and then the mid layer, and then the applications on top. And there are, and this to me is the transformation we're trying to drive. That it starts at that architecture and that flexible architecture that gives you access to the data to make better commercial decisions. It's not data for data's sake. It's access to additional data to make better decisions. So that was one good example. But just one thing that we're seeing a lot is, I think when you say data, there's different types of data, right? And people automatically go to the customer data, right? And I don't think that's definitely useful, and especially around customer performance and predictive analytics on payment and other things and sort of renewal and what have you. But actually the journey that I spoke before, the prop to payout piece, I think the data behind that would allow a much different dynamic in the broker-funder relationship and the enablement of additional management to drive better behaviours, to drive a better fit from what brokers are proposing. Because, I see volume stats, I see conversion stats, for example, but it's not the next step, i.e. getting some data on, what the actual cost to serve each deal is based on the path it takes, not just total deals divided by total cost, like taking that level of detail of data. That to me, if we could, and that's what we're working on for a client at the moment, is how do you get that level of data and what behaviour does that drive? Because it's not necessarily that we're looking to stop behaviours. What it allows you to do is incentivise the right behaviours. You can share some of the profit that you make by people behaving and saving you cost to enable them to do it more.
And we want the right products delivered in the market in the most simple, effective way. And some lenders have changed their product mix. They've gone away from asset finance into pure loans. And that's probably a cost analysis on 100%. The complexity of doing those deals. But actually, the lenders who are not doing that and have got assets behind there, we're probably a bit more clunky because we're doing evaluation in the piece. If it's not digital, there's a layer. And so as this evolves, we should be able to give much better products to the market and to the customers because we've digitised what were complex products in the past rather than just going back to a basic product, which may not be good in the long term for the sector. A lot in that.
Can I just touch on something you said there? I think really resonates, and it's the fact that you talk about valuations, right? And everyone goes, "Oh, that's what makes asset finance complex," or we've got totally all these different assets and all the different SKUs and types and what have you. But the way people need to look at this, which I haven't seen enough of in the past, and I think it will unlock this in the future, is look at a process, and that's the value in asset finance. But if we can make it more efficient by using a digital solution or a change in process, that's the value. It's not buying a piece of tech or buying an AI agent that does it all for you. It's take that process and go, right, do we need to do it? Yes. Do we need to do it for everyone? Probably not. Well, how do you segregate who you need to do it for? And how do we do it better and faster and more efficiently? And just as an example, and I haven't seen this tech enabled, but I've seen it in the car space for floor plan finance, where asset inspection or proof that it's on site or even proof of premises, you can do that via an app on someone's phone. You don't need to send someone out there, and it's all validated and it's all that. So I don't know how many people are still doing checks and things like that, because I know we had Arena, not to mention the arena that we're all
Supreme Court Arena. What's next? What
I've got 3 on my hit list. I've done 2. I'm almost there. But there is technology out there, and I think what you said before, we're not out there looking for it enough. It's not in the strategy of the company. It's not in the DNA of the company to find a solution to this. You've stumbled across one as an example, but we should be driving tech to engage with these companies.
I think it's quite hard because the point you make, and we are using one of those embedded applications for asset inspections, sending a link, the photos you can't upload a photo. You've got to take it there within the app, so
Yep.
you know that it's quite clever. The challenge there is the businesses that start these are quite small balance sheets, and they're engaging with financial institutions
Regulated
that have
banks.
got procurement and layers, and it's quite hard to make that step. So I do think there's a scale issue, and some of this fintech development that we really would love to have runs into regulatory treacle.
I know.
We've got to find a way through that.
Just buy one of the companies and buy one of the companies as the regulated bank, and then you can sell it as a service
There
to
we
the rest
are.
of the
There we
market.
are.
We'll talk about that after. Yeah.
touching on that topic of collaboration in the industry, one of the things we mentioned, fintechs, for example. Be fascinated to get your views on how we could see maybe fintechs and other collaborations in the industry driving the market, or what the future outlook could look like for asset finance. I want to get to 2030. That's the next question. What that could look like.
Well, I always think what's going to drive behaviour is the market, is interest rates. And I do think at the moment it's quite exciting because competition is driving the market. There is plenty of business out there, but actually we're starting to branch out into other customer areas who couldn't find asset finance before and get that. And that's the exciting part of the growth in our industry sector. And I think that's driving behaviours in terms of if someone's got something new and shiny, and that gives them a competitive advantage over you, and they're going to start winning business, and that's making more attractive to customers, and the long life portfolio they're running is enhanced because of that. I think the next lenders will want it, and I think it is like the customers, where one person buys the new machine and the competitor next door is suddenly jealous. And I think that's not a bad thing, providing obviously it's done within budgets and the costs are calculated right. But I think it's the first innovative area that I've seen in our industry for a number of years now. We're on a quite an exciting curve.
And so, leading up to your vision of 2030, what do you think needs to be done today as a step in the journey to get to?
Well, I think you've got to be agile and ready, and I think you're going to be kicking yourself if a step change. We were talking earlier, weren't we, about the Supreme Court and the impact of that October 23rd Friday evening call that says right now.
You remember the time, I'm sure.
I remember we had a call at 6 o'clock. I remember where I was. I was away in Dorset. And I set up a little laptop
one of those days
and dialed in, and there we are. And by Monday morning, most of the industry was worked out over the weekend what they were going to do, and broadly by Wednesday the following week, everyone was getting informed consent forms and commission disclosure forms, and off we went. But that evolved into workaround. It was a workaround. Most people were manually doing letters with a view to my system will catch up eventually. And wouldn't it be nice to be in a position where the next thing comes along? I know we're going to get to the 2030 question shortly, and we've got to be ahead of that. We should be better. I mean, an interesting report of the FLA. I'll just give you
Go for it.
One of the FLA has just invested in Tableau as an online data set for its members to log in and see who's funding, what's being funded in the UK economy, how and broadly where. But we want this data to be informing government decision making. If you're going to build an import park and put tax breaks in there, where would you put that if you're in government? What is the customer infrastructure around that? Who's buying what and who invests in what way? And that data is sitting in the lender base, but it's quite hard to get that into the centre to disseminate to advisors or government or anyone else who may want to invest in the UK. And this tells me that across our industry, the data quality and the data handling needs to improve, because we can't get it into the centre. And so there's the straw man.
Yep. One question. Apologies, wasn't on the list, but I've just, and it's getting might be a tough one. But looking back, right, you talked about that Thursday in October, 6 p.m. Dorset. Don't know what you were doing in Dorset, but let's look back at that and go, hold on, didn't we jump the gun? Because there's been all this change in process and everything, and I get we managed what the decision was then, but looking back with hindsight, and I know the question is, should we wind back? But obviously the Supreme Court's been reversed in that, in a lot of the regard, and the ripple effect into asset finance of that decision, which at its heart is a decision about regulated business. right? Although the application was potentially wider, it was only ever potentially wider rather than definitely wider. Is there anything you change from that? Is there a learning from that?
I think the learning from that is that I think the broad consensus through the industry was that commission disclosure was going to come at some point.
Yep.
And some lenders have tried it in the past and had massive first mover disadvantage when they did this in the past.
Yep.
So it's always been bubbling under the surface, and no one's ever gone there. Or the ones who've gone there lost market share and quite quickly, fell back into that. And I think the cat is out the bag. And I know there's a yearning from the broker community to get. But I think the models will change, and I think already we're seeing a change in how commission is discussed with customers, which is what it's described as, and what services intermediaries providing there. So I think that's tidied it up. I think it's going to be difficult because you've got quite a few lenders who are regulated banks, who have regulated portfolios in motor or mortgages or other areas, who are already used to disclosing and taking the customers on that journey. And now they're going to try and go back. So that'll put it won't be a level playing field within their businesses. So I think there's that problem. Now, also, behind this, you've got non-bank lenders who potentially could go back, but their wholesale funding lines are coming from those primary banks. So are those primary banks going to create a disadvantage? So I think there's a whole market piece here. I do think the collaboration with the NACFB and other associations now, BVRLA, we're looking at all these different ways of how to... We've got to keep lending going. We want to grow this economy. And the outcome of the Supreme Court decision is that we now know that we weren't breaking the law. Mm-hmm. But since October, the implication was that for 20 years in our careers we have been. So it's quite nice to reassure yourself that we weren't all losing the plot. Yeah. But now how we take that forward is quite important as an industry. So I think there are going to be ways of doing this professionally. And if the service level is described right, I think customers will pay for it. They won't have a problem.
Yep.
So, John, I've been burning to ask. I've been burning to ask. What would a high-performing asset finance company look like in 2030?
Well, I think it's a combination of digital and human, and I think this is a key thing. And I also think that the agility of the businesses to react, because I'm not sure when did we last have a stable market. I'm trying to
a what?
A stable, one of those things. Yeah, it's
never heard of it.
We've gone through
the financial crisis or COVID or
we've had obviously coalition governments. We've had Brexit. We've had Scottish referendum. We've had COVID. We've had you name it. It's all happening and tariffs now and so I think the change is the evolving thing is the new norm. So I think organisations. So a high performing financial company or an asset finance company has got to be able to react to the market as it sees fit. And there is one thing that I'd probably raise in there. This government rolled back the 2035 green emissions to 2030. So if you ask me what's going to be like in 2030, if the promise to drive the green agenda is held and businesses are held to the fire, I think lenders and people who running asset portfolios are going to have to be very aware of what that means for their businesses and have the data at their fingertips and the ability to lend against electric vehicles, solar, all those other things, and report it. And I don't think it'll be, it's only 4.5 years, it's so close. I think no one's going to be ready, but a performing business will have the framework in place for what comes next. So these timelines will move around, and there's there's global shifts that will define that. But you'd like to be, I'm pretty sure I'm going to be in a business that is ready and agile for that, and the opportunities that come with that. Because I think there is going to be a great, and our industry is brilliant at driving the engine room of the economy. 4.5 million SMEs. And this, I know we can do corporate big ticket all day long, but actually, that's the engine room, and that's the bit that needs to move. So then that's huge amounts of data, and I'm quite excited by. If you'd asked me 10 years ago what the 5-year looked like, it probably would have been a bit more of the same, maybe we'll get Brexit out of the way. We'll see how it all out. We'll keep it steady, see how it lands, and come 2020, we maybe grow. COVID's come along, pushed it back 5 years, but now clouds are clearing a little bit in terms of lockdowns and everything else, and we've got a chance to pledge in a growth economy, and if this is going to happen, we're going to be at the heart of it.
Okay, awesome. I really want to move into the quick fire rounds now.
Right,
so this
okay.
is going to be some short, snappy questions with some snappy answers. Are you ready for them? I've got them loaded up. So, what's the biggest industry myth you'd like to bust? In asset finance.
Okay, I've got to be in my bonnet about when they say asset finance is just a product line in banking. I heard that a lot. It's not. It's just not in this bank, by the way, not where I work now. But in the past, I've run into.
Should you call someone from Paragon?
No, it's fine. I've run into just going. No, look, it's not an industry.
Yeah.
It's just a line. It's it's not a line because in other areas of banking, the money is the key differentiator in terms of how the product flows. In our sector, it's the industries we're serving that define how we do it. So we hire people with a printing background to lend to printers. We hire people with a construction background to talk to JCB drivers. And then we overlay the financial instincts and train them on that way. And that's that's the differentiate. So the myth is that I want to dispel is that we're not just another part of banking. We're better than that.
I know it's quick fire, so I'll try and be.
Sorry,
quick.
that was
I'll try and be. No. I'll try and be quick because I'm gonna sort of add to it. I totally agree. I think one thing we've got to be very mindful of as an industry is that word I used before, which was commoditisation. And I think the move from a bank recently to switch off asset finance and try and push all their customers into capital loans, capex loans, is we are driving that agenda. We are risking that agenda because of the commoditisation of products. And whilst there's still definitely a view within the industry that asset expertise and the vertical expertise is necessary, we've actually mined it right down to much less of what it was a long time ago. And I think if we could decide what we want the industry to pin its hat on going forward, which could be asset expertise, it could be a combination of asset expertise and customer service, through digital transformation, of course. But yeah, I think we're going down a dangerous road potentially here. I think.
Well, I think the Federation of Small Businesses put a super complaint in 2 years ago about use of personal guarantees for small businesses and loans, and I think asset finance has always, it uses personal guarantees, but if the asset is sufficient, that's enough security to get to the deal. So I do think there's a place for the asset in business lending, and we mustn't forget that. These weren't quick fire.
I was just thinking.
Sorry.
Okay, so
you missed the signal.
So next quick fire.
Yeah.
Are you ready?
What's
one technology trend that you'd say is overhyped?
AI.
AI. All AI?
Not all AI. Use of AI.
Use of AI.
That is snappy.
That's it. That is a snappy answer. That was a quick fire one. Okay, next quick fire one. What's the most exciting innovation in asset finance today?
AI.
Good answer.
Any particular parts?
You call for quick fire.
Yeah. We've really changed up
you
here.
Pushed him into a corner.
I'll say all of it. I think there's selected parts. If you use it properly in your organisation, great. But I think we're risking missing the trick by overhyping it. We've got to focus.
Yep. Next one. What's one thing you'd change about asset finance overnight? You could snap your fingers.
A chip on our shoulder that we think we're not relevant compared to other financial areas of the market.
Could I get a slight expansion?
I think we always apologise that we're asset finance with this industry over here. There's investment banking, there's all these things, corporate banking, but actually it's big, it's important, it makes a massive difference to people's lives, and we should just puff out our chests and just tell everyone about it. We got a chip on our shoulder. I haven't, but as an industry question, I'd change the messaging.
Well, I mean, and you said before, I think it's an interesting point, and I'll try and be quick. But you said before you went into insurance and it got, you said boring, but I mean it was at low age. But these are massive industries, but they're no more exciting than asset finance. I've been in investment banking. I mean, there are a lot of investment bankers, and a lot of investment banking is just PowerPoint, right? So they're not, when you get into them. I think we do have this kind of feeling that, and we do act like sometimes the sort of, what I've said before, the illegitimate stepchild of banking, which is not. It's not true at all. It's a fascinating industry. It's had my interest for 20 plus years, and we just need to figure out how to switch that on.
But the first question, how did you get into asset finance? And I fell into it via insurance, by a recruiter. There's an adage that a lot of the industry veterans say is no one ever, chose to go into asset finance. We all ended up here,
true.
And actually, that's playing us down as well.
True. We
need to start saying, actually, no. People are choosing this as a career and they're coming into it because they want to be in it, and that's the bit that I want to change.
I'd say that's a very strong message as well to be able to end the podcast with. John, Christian, it's been an absolute pleasure having you on the show. We talked about data and we decided that we would probably have to part that one for a different episode.
There's a whole episode,
a whole separate episode. Yeah, absolutely. Yeah. It's been a pleasure, guys. Thank you very much.
No worries. Thank you.
Thank you.